wonderful good day, ladies and gentlemen, to our virtual roadshow today with Craig Parry, the CEO of IsoEnergy. And yes, we want to talk, of course, about uranium. We want to talk about ISO. First of all, hey, good morning, Craig. Good to see you.
Good morning, Jochen. How are you doing?
Perfect. Thank you very much. As we have still people checking in here, so maybe some remarks from my side up front. First of all, we are fully complying to the European data security law, so nobody can see each other and nobody will see any names nor emails. Please use the chat function, which is the third point here in the gray vertical bar, where you can write in your questions. That would be fantastic. And yeah, let's see. We have still some people who are checking in. There is the chat. Yes, Craig wrote already. Fantastic. And yeah, so let's give it another 10, 20 seconds. I have the presentation here. Yeah, we want to talk about IsoEnergy, of course, one of the best or probably the best uranium explorer with such a fantastic discovery after NexGen. And the guys around Greg did a fantastic job, and they just brought out again some very good news today with very high grade again mineralization. We are waiting there for the results also, but it's already fantastic. A lot of off-scale mineralization which has been shown on the Hansen centimeter already. And on the other hand, we think this is the next big uranium thing in the Athabasca Basin for sure, which might be also the next mine. And Craig, I think we can get started. And I put up the presentation here, and I would say the floor is yours.
Great. Thank you, Jochen. And great to see so many people interested in IsoEnergy and uranium. Well, you know, and I suspect some of the people listening in and watching are quite familiar with the story. So very pleased to be updating everyone on what we're doing. As Jochen says, you know, I think we have the most exciting uranium discovery in the past 7 years. Of course, IsoEnergy is a spin out of NexGen Energy. I was a co-founder there. We discovered that giant Tier 1 Arrow deposit down in the southwestern part of the basin back in 2013. And proven up a massive resource there. But of course, IsoEnergy, we discovered our Hurricane deposit back in 2018. Certainly the most exciting thing happening in the uranium space today. And you'll get a feeling here during our presentation for what we're doing. And I think, you know, we are the most active uranium explorer in the world today, and certainly the best way to play the coming uranium boom. So we'll move through the usual disclaimer there. You've all seen that before. A little bit about the macro picture. I won't go into too much detail here, but what we've seen due to COVID-19 and due to very low uranium prices, we've seen massive cutbacks in production. And that pie chart up in the top right-hand side of the screen there is the tail of the tape. Really about 50% of the world's production has been reduced over the past 12 to 24 months. So we're now in a dramatic deep undersupply scenario. The global uranium market's about 194 million pounds per annum. Today, primary production is less than 100 million pounds per annum. So at some point, the supply-demand gap there needs to be corrected. We've seen uranium prices pick up at the start of this year. For the first 3 or 4 months, we saw uranium prices run very strongly from $20 a pound to $34 a pound. Now hovering around $30 a pound. We think that's because the US utilities primarily are working through the stockpiles they have. They don't have much left to go there, though. And we saw on Cameco's quarterly call yesterday, Cameco's turned very, very bullish on this. And Cameco are saying that we could expect a dramatic increase in price very soon as those purchasing managers at the US utilities, the world's biggest customers for uranium product, as they come back online and realize that there's a very tight supply situation, we could see a really explosive jump in uranium price over the coming 6 to 12 months. So that's something to look forward to. It hasn't happened yet. We're not too focused on the macro picture in the market. We're just sticking to our knitting here at IsoEnergy and drilling out the world's newest great high-grade uranium discovery. And so we'll get onto that. The Hurricane Zone, there you have a core box from our earlier drill program back in winter last year, we've now repeated those results. Those results were truly spectacular, 8.5 meters at 34% U3O8. To put that in gold equivalent terms, that's about 8.5 meters at about 320 grams per ton, or 10 ounces per ton gold. So truly astonishingly high grade rock. We put out some results last week, 5 meters at 48% U3O8. So in gold equivalent terms, that's 5 meters at about 450, 500 grams per ton gold. So, the Athabasca Basin is known as the location of the densest accumulations of dollar value in rock on the crust of the earth. And very pleased to report we have one of those. You can see down here, some of our more recent results. Again, some truly spectacular numbers in there. 9 meters at 13%, including 4 at 27% uranium, 10 meters at 12%. So great numbers. We put out some results this morning. We drilled our hole 76, hit another spectacular intercept. We've only put out our scintillometer results on that hole so far, but 4 meters of that was off scale, truly ultra high grade uranium. So when those assays come out in probably about 4 weeks' time, we expect you'll see more of these sorts of numbers, if not even better than that. So it's going very well with our drilling program, and the deposit's growing into a serious deposit now. Why exploring the Athabasca? Look, we put this NexGen Energy share price chart in there as a little bit of a guide as to where we're headed here. Of course, we've made the discovery now. Our share price has gone from about 25 cents to $1.30 today. I see we're up strongly this morning, I guess off the back of some clarity coming around the US election and a bit of bullish sentiment emerging there. However, on this chart here, we're at about midway through that 2015 period. We've made the discovery. We've seen good growth in our share price. The market's starting to come to appreciate what we've got on our hands here, a true, serious, large, high-grade uranium discovery. But we haven't put out a resource yet. And, of course, when we put out that maiden resource on Arrow at NexGen, our share price growth was explosive. We went from a trading range of 60 cents to 80 cents, all the way up to $3 and beyond, and on up to $4. So the share price went up 5 to 10 times off the back of that news. We're coming up to that period. At some point in the next 12 months, we're going to release a maiden resource, and you should start to see that explosive growth. So not too late to get into the story is the message there. It's plenty of time, but you want to move quickly. We're going to keep putting out spectacular drill results for the next 12 months before we announce that maiden resource. Very much focused on the Athabasca Basin, of course. If you're going to look for deposits, quality deposits, high-grade deposits, you've got to go where the best ones are, and they're in the Athabasca Basin. Of course, our Athabasca Basin, where we are, is in Saskatchewan, #1 mining jurisdiction in the world, best place to permit and build a uranium mine on the planet. We've got a great team with a huge track record now. Steve Blower, our Vice President of Exploration, has led the Denison team to discover the Griffin deposit. He's now led our team to discover the Hurricane deposit. And, of course, we're backed by the NexGen team that discovered the Arrow deposit. So in our group, we've made more discoveries of pounds in the Athabasca Basin in the past 20 years than any other group. So you're backing the right horse when you're backing IsoEnergy. Timing's been right. We've been able to build the company out, and you'll see a tenement map shortly. We've been able to build the company's asset base up at a time when no one else was doing anything. So we've really built, we've gone from having 5 very small properties to now having the third or fourth biggest land position in the Eastern Athabasca, which is certainly the most prospective place on the planet for high-grade uranium. So, whilst the market has been difficult and tough, our success from NexGen's allowed us to raise money and do work that others couldn't do at that time. So that set us up perfectly. And we're just leveraging all of those capabilities, both technically and in capital markets, to grow the company as quickly as we can. There's that tenement map I mentioned. We actually started when we spun the original 5 assets that we had out of NexGen Energy. We had very small land package. We had really only 5 postage-sized tenements. including the Radio property and Thorburn Lake properties there. And we've since, through both acquisition from Cameco and Orano and other majors in the basin, and through staking, managed to build up what is one of the biggest land positions in this most prospective part of the world for high-grade uranium. And our strategy, so very, very simple. Put your foot on as much of that eastern Athabasca as you can and get in and explore under the unconformity. So there's a couple of different styles of mineralization there. There's unconformity style mineralization, and then the discovery of our Arrow deposit at NexGen has proven that basement-hosted deposits can be very, very large, very high grade and very economic. And this eastern half of the Athabasca has never been explored for those deposits. So we're simply getting in and putting our foot on as much of that ground as we can and testing under the unconformity, looking for the next Arrow deposits. My thesis is there will be several Arrow style deposits out here. They're just waiting to be found, and we're in a great position to go and find those. And then secondly, and this is this part of the strategy is what has led to our discovery of Hurricane. Back in 2007 to 2010, during that last uranium boom, huge amount of money was raised, and a heck of a lot of that money went into drill holes in this eastern Athabasca Basin. And because of Fukushima in 2011, the industry ran out of money all at the same time. And that meant that there are a hell of a lot of first pass drill holes drilled out here that hit mineralization or hit attractive and interesting alteration that were never ever followed up. So again, put your foot on as many of those as you can and get out and start drilling around those drill holes. And any one of those drill holes could be tantamount to a discovery hole. And that's what we did at Larocque East. We acquired Larocque East, the Larocque East property off Cameco for the princely sum of $300,000 in stock back in 2018. We wanted that property because we saw some very interesting alteration in a couple of drill holes there. So we acquired that property. We sent a drill rig out there 6 weeks later, and Steve announced the discovery to us 2 weeks after that of our Hurricane deposit. So that's the strategy really playing out very well and very clearly there. And on to that deposit and the discovery we've got. So again, we're in the eastern part of the Athabasca, the sort of central north shoulder of the Athabasca. You'll note here roads running through the area. You've got the village of Points North and an airport there. So access very strong. You'll note the scale bar there that's 10 kilometres. So we're only 40 kilometres from Points North. But crucially, we're only 40 kilometres away from the McLean Lake Mill, which is the most important uranium mill on the planet today. It's currently undersupplied, currently on care and maintenance because of COVID-19, but undersupplied. So Orano, the French giant, Areva Orano, own that mill. That is one of the primary supply points for uranium into France and their massive nuclear power industry. And come 2027, 28, that mill starts to run out of mill feed as Cigar Lake starts to wind down. It's currently only supplied by Cigar Lake. Orano don't want to see that mill close. They can't afford to see that mill closed. So we are so very strategically located in relation to that mill, only 40 kilometres away from the mill, and we'll be looking to feed product to that come 2027, 28. So strategic import. You'll note the road from Points North and then across our property. This red streak here is a conductive belt that hosts is the focus of mineralization in this part of the world. You'll notice a number of smaller deposits, Alligator Lake, Cameco's Larocque Lake, and then our Hurricane zone here, and that trends up right through our ground. Our properties, of course, prior to the discovery of Hurricane, our Geiger property was our flagship property, but you can see we've got so much of this excellent prospective ground tied up in this part of the world. Zooming in now to Larocque, onto the Larocque East property in the Hurricane zone or the Hurricane deposit. Key features here. You have a low-grade halo. And when we say low-grade in the Athabasca Basin, we're actually talking about 1% uranium. Other parts of the world, 400 ppm uranium is mined. So this, on a global scale, is very, very high-grade, but we call it our low-grade halo. And then you'll see there's high-grade zones and pods within that. Now, prior to this summer drill campaign, the very high-grade zone where we're putting results out in here, this red zone in here, was confined to just a northern swathe there, and so was half the size of what you're seeing on the map today. So this summer drill campaign has been incredibly successful for us. We've had some spectacular drill hits, some of actually the very best drill hits and intercepts in any commodity on the planet in the past year. And what that's allowed us to do is expand or double the size of that high-grade zone to the south. So now the deposit's grown significantly. You'll notice the property boundary map here that runs on into Cameco's ground. Certainly they're going to find some high-grade uranium over there. We can't wait to see them drilling out there and seeing what they find. But we are very confident now that we have a deposit that will be a standalone, very high-grade mine at some point in the not-too-distant future. So we're ecstatic with the outcome of that drill program. Very importantly, again, 40 kilometres from McLean Lake Mill, we're only 330 metres below the surface, which opens up a multitude of mining opportunities and approaches to mining. And very importantly, we're not covered by a lake or water on this zone and this deposit. So we're in a fantastic position to build a mine there one day when we're convinced we're ready to do it. Some of the summer drilling, you'll notice, so this is a cross-section running from north to south across the deposit. The orange zone here is the mineralisation. The darker orange is the very high-grade mineralisation. You can see the drill result we put out today, 7.5 metres at greater than 500 counts, including 3.5 metres at off-scale, drilled between some really spectacular intercepts. So we would expect that drill result we put out today, the SINT results, will translate to very high-grade mineralisation, and you're surrounded by some spectacular grade there, including one of those holes that we drilled, we announced last week, which hint 5 metres at nearly 50% U3O8. So, astonishing grade. The mineralisation seems to be focused around these H and I faults. So these structures running up from the basement are the fluid pathways for this mineralisation, and you get these high-grade zones. But what we're very excited about is that over here, this J and K fault look like they could also be fluid pathways, and then there is starting to be mineralisation appearing at the top of at the unconformity between the J and K fault. So that looks like an exciting target. We haven't closed it off to the south, the deposit off to the south, so we'd expect it to grow in the next couple of programs as well. Another example of the high-grade mineralisation here, and just another example of where we haven't closed the mineralisation off. So we've still got more work to do in our next winter drill campaign. So that's looking good. Here's one of our geologists, Justin Rodko, doing handheld scintillometry of the results, and that's how we put out those SINT results. And then, of course, we send those samples off to the lab before we get lab results coming back, typically 4 weeks after putting out the SINT results. So I mentioned that drill hole that we put out this morning. We should have assays back for that in about 4 weeks. So important point, expect very good news flow from us over the next couple of months. Just zooming out a little bit, this is the eastern part of the Larocque property. Cameco's Larocque North sits over the property boundary. They've made a small discovery there. We do wonder if our deposit continues strongly over to that part of the world. We've got the hurricane zone here, and then this conductive terrain that I mentioned on an earlier map sweeps up through our property, and there are a number of other mineralised intercepts, sniffs of mineralisation that have never been followed up on that property. So we think there's a very strong probability of further discoveries being made as we get in and drill around these holes. So that's something that we'll be doing going forward as well, is further test work on those targets. A schematic cross-section here, just explaining where Hurricane fits in terms of other deposits in the basin. Of course, McArthur River was, until it was closed 2 years ago, the world's biggest uranium mine, sits down at about 500 metres depth. Cigar Lake, the current world's biggest uranium mine, at about 400 meters depth, and then Hurricane sitting up at about 320 meters depth. So, relatively better position than those world's, the two biggest mines in the world. And you'll see over here NexGen's Arrow deposit, which of course is down in this grey basement rock, crystalline basement rock versus the Athabasca sandstone, and that extends to great depth there. But we're in a really neat position there with the size and depth of our deposit for mining scenarios. So that's enough about the Hurricane discovery. Certainly a tremendous result for the team. They're doing a great job there. We keep hitting great mineralisation. The deposit keeps growing, so we're very excited about that. Importantly, just looking at the capital structure, so share price performance, as I say, has been pretty good over the past 12 months. More to come, though, we think, because we're going to keep getting great results, certainly over the next 12 months as we test the margins of the deposit and we drill the deposit out and infill drill there. Very tight share structure, though. This is crucial, of course, for share price performance. NexGen Energy is our major shareholder with 53% of the company. NexGen keeps contributing capital to each of our capital raisings. We've got Uranium and Cameco there, so two of the world's uranium majors. So our register's a little bit of a who's who in the uranium space. Free float, probably, and then we have a number of very sticky institutional shareholder money there in guys like there's a group of bullish uranium investors, guys like Mike Alkin at Sachem Cove, who's a bit of a thought leader in our space, Adam Rodman at Segra, Brian Lax at Old West. These guys are investing for the longer term. They're there for the uranium boom. They've placed big bets on IsoEnergy and others. And so we see their money as being there until we see a uranium boom. So that means that our effective free float is only about 20%. So very, very tight share structure. And because we haven't been around long, we've really only got 115 million shares fully diluted. We've got this convertible debt and a little bit of an interesting deal that we did with Queens Road Capital and Warren Gilman. Warren Gilman, of course, he led CEF, which was a Lee Ka-shing fund. Mr. Lee put in 200 million into NexGen, so we've had a very good experience with Warren there. And then he went out on his own and set up Queens Road Capital. He's provided us with $9 million of capital in a convertible facility, which is in effect equity. He treats that as equity, but gets a small coupon on that. So that sets us up in a very good position. We've got 12 million in cash in the bank today. More than enough funding to get us through next year. And all of these warrants are currently deeply in the money, and the conversion of those will bring in $4 million over the next 12 years. So we're not come a capital raise anytime soon. So we're in a bit of a unique position in the uranium space. The team there, I probably should have introduced myself. I'm an exploration geologist. I spent 9 years with Rio Tinto, mostly in exploration. I ran the Kintyre pre-feasibility study, so I've had a track record, and then of course established NexGen with our chairman Lee Courier. So I've been in the uranium space for 12 years. Steve's had a great history in the uranium space. I mentioned that he led the team to discover Denison's Griffin deposit, and now done it again here at ISO. And then we're backed up by a fantastic team of financial people and and geologists. In fact, nearly all of our full-time employees are geologists. So we've got a heavy exploration focus. The board there, Chairman Lee, of course, Lee's CEO of NexGen and has done a tremendous job to build NexGen into the billion-dollar company it is today. And the other directors all sit there as founding directors of NexGen. So we've got a great support network there. So, Jochen, that's it in summary, I suppose. We are really the only junior in the world with a new high-grade discovery. I think very importantly, we're very active. If you look around the space today, even the majors aren't doing much. NexGen's not doing a heck of a lot at the moment. Cameco are shutting projects and mothballing projects and scaling back. We are the most active explorer in the uranium space today. So if you want to back a company that will spend your money correctly by putting it into drill holes in the ground and putting out good news flow, we're the one to back on that front. Timing's been very good. We're about to head into a bull market, we think, so now's the time to look seriously at investing in the company. We've been saying this for some time. You know, if we did a roadshow with you about a year ago, I think we're probably trading at 40 cents a share then, or somewhere thereabouts, 35, 40 cents. So we've delivered anyone who bought on that roadshow 5 times their money, but we're still just getting started here. Lots of upside to come there. We've got a tremendous team. You know, Steve and the team are, I think, second to none in as far as an exploration team goes. I'd put them in, you know, up there with the Rio Tinto people that I've worked, global practice leaders in exploration. We're in the right part of the world, and we've got a very tight structure. So whenever we put out good results, as you've seen this morning, I think we're up 10% this morning off the back of just that scintillometer result. We're going to put out the assays in about 4 weeks' time. They should be pretty spectacular assays based on what we saw in that core. And people can have a look on our website at the news release, and you'll see some dark black core over 8 meters in that drill hole. It looks so very, very high grade. Certainly the scintillometer results are hinting to a very high grade result there. And those assays will be out in about 4 weeks' time. So I think that's a great thing for investors to look at. So Jochen, thanks for that. I guess we can take any questions.
Yeah, super, perfect. Now I go back to this here. Thank you very much, Craig. Yeah, great presentation. And I remember well our roadshow a good year ago, and I bought in actually below 40 cents, so I'm a happy shareholder. But what is even more important for me is really that we didn't know each other too well. And I listened several times to your presentations, and you delivered. You kept your promises. And this is why the share price where it is today, and I think this is why the share price will go well over $2 or $3 even, yeah. This is, for me, absolutely foreseeable. And it's always key, a good project and a good team. And then it works, yeah. So, and now let's see about some questions. Okay. Last year, yellow cake investors nervously did await Trump's tariff decision. Will it come with Joe Biden? I think Trump has won the election, no?
Oh, gee, well, that's the trouble. Who knows? Look, I actually think that the US tariffs and their approach is a little bit of a boondoggle. You know, it's a fairly minor net impact on uranium markets and uranium outcomes. So you know, and I can't really answer the question, but I don't focus too much on it. I think most importantly, you know, the story remains a supply side story. We're dramatically undersupplied at the moment. There simply isn't enough production to meet primary demand. So as soon as those stockpiles start to whittle down, gee, we're going to see a run in the uranium price.
Honestly, I have also maybe a little answer on that question, because I think it doesn't matter who is in the White House. The problem lies in the American market, because they produce probably 1 million pounds and they consume 55 million pounds. And they are dependent on US, Uzbekistan, and Kazakhstan. This is from where approximately 45–50% of their uranium comes from. And I am not aware that those are the biggest friends of the US. And so from that perspective, I think they really have to do something. So they have to support the uranium industry. And this is why I think, who cares who is in the White House? Reality kicks in. And this is why we will see a much better market. This is my understanding. Maybe I'm wrong. I don't know. I'm always a little bit too much ahead of my time, but this is how I see it, at least. Yeah, then we have a question from an investor in Zurich. Any plans to go into production? If so, when? I think that's a long-term question.
Yeah, look, that's certainly any business I've ever started. We approach it with the intention of going into production. We have the team to do it. We've got a track record of developing projects. One of my last companies, I built a coking coal. We discovered and built a coking coal project in Far Eastern Russia. So we take that approach. We've always got that in the back of our minds. Certainly today we are doing some things that early stage work that will allow us to rapidly move through the permitting and development process. We've brought on board a gentleman by the name of Peter Longo, who was the COO of Denison. Peter's doing all of that early stage environmental baseline work and then looking at some mining scenarios as well. And I think here, because we don't have to build a mill, we're so very close to McLean Lakes Mill, I would say to you, and look out for NexGen Energy's news over the coming year or so. People think that the Athabasca Basin has a long timeline to permitting a project like this. That's simply not true. There's a very clear process there and a timeline. And I would say to you that we would be looking at bringing Hurricane into production by 2025, 26, just to meet as that supply-demand gap really ratchets up, but as production from Cigar Lake starts to wind down as well.
Maybe a comment also from my side, because this runs also into a question I had. You have Orano as a shareholder. You are 40 kilometers from the McLean Lake Mill, and we all agree that there's a uranium bull market, maybe not just around the corner, but within the next 2 years. My feeling is that really will kick in, because we need the power for e-mobility. Definitely, we need to charge those cars, and we cannot do that with coal nor with oil or gas fire. This is impossible. We need clean energy, meaning no emission. So sustainable energy cannot create all of the supply. That's impossible. So we need more nuclear power plants. So my question is now also leading into that is, wouldn't it make sense for Orano, when you move on that successful path, and you maybe have by the end of next year, I don't know, your first resource, that they would jump into you and say, hey guys, we want to do a strategic partnership with you because we have the mill 40 kilometers down the road?
Yes, look, I of course we can't divulge too much of our sort of discussions, but I can tell you that and we're not under CA to them, but Orano's been very interested in what we're doing. It is the perfect deposit for them to feed that mill. It's right next door to the mill. I think you're heading in the right direction with that comment and question.
Okay, super. So then there is a question from a friend of mine, good investor in London. Interesting story, but if a bull market is really due to just around the corner, why are the major competitors mothballing projects?
Yep, good question. And that's very, very simple. It's because their projects aren't much good. They're they are simply uneconomic. You look at Cigar Lake, you look at MacArthur River, those projects have operating costs in the order of $50 to $60 per pound. So they're losing money even at today's prices. They need much higher prices to be economic, and that's simply the case. Even that low cost in situ leach production from Kazakhstan, Kazatomprom's production primarily, that has an all-in sustaining cost of about $30 per pound. So Kazatomprom's not making much money in today's markets at today's prices either, and so hence you've seen all of that high cost production shut and closed down, and it's not coming back on stream until you see much higher prices. And the only way you're going to see that supply gap, that 50% undersupplied situation improve, is when uranium prices increase. As Rick Rule says, the cure for low prices are low prices.
That's right. Absolutely. Yeah, then we have an investor from Munich. I like your project, but how can you be so optimistic about uranium price as the Kazakhs and Cameco potentially, which were curtailed, would come to the market again if the price would rise? What uranium price ISO would need to be economical? That's very far too early to say, but we can speculate. At least we have to be careful with the regulators, please. That's a forward-looking statement. It's so high grade and looks easy to mine, so should not be high in comparison to others. Shouldn't be a problem.
Yeah, so I guess we're optimistic about prices because of we don't have it in our presentation anymore, but we typically used to put a cost curve in there, and that shows that the back end of the cost curve all of that production is north of, on an all-in sustaining basis, north of about $50 to $60 per pound. So at these prices, you've seen all of that production closed, and again, that production is not going to come back. The incentive price for bringing that production is around $70 to $80 per pound. So we've got to see uranium prices get back up to $70 to $80 per pound. In the meantime, you've had a new generation of uranium deposits discovered, both our Arrow deposit and our Hurricane deposit, that we think will fit in the first half, or certainly Arrow will fit in the first quartile of the cost curve. In fact, Arrow is a unique deposit. It will occupy. It's really like the Uber of uranium. It will occupy almost the entire first quartile of the cost curve at a quarter of the cost of the next best producer. So that's a bit of a threat to the industry in about 10 years' time as well, to keep in mind. But we think that the demand at that point in time will easily sate or take up all of that production. So really good question, really interesting question. I think, Hurricane at the end of the day will be a relatively low cost mine. We're looking at some innovative approaches to mining the deposit. Pete Longo, of course, did something very innovative there at Denison with their Phoenix deposit. He looked at in situ leach of high-grade Athabasca deposits and came up with a very robust economic model or economic approach to mining that deposit that will put that down in that new development down in the first quartile of the cost curve as well. There are new ways to build projects, new and better ways, and certainly Cameco's high-cost freeze wall mining approach is not the way we would go forward. And hopefully that answers the question. I think fundamentally, you're not going to see that very high-cost production come back on stream until you see $80 a pound uranium. And in the meantime, there's a sweet spot for guys like us to bring on production at much lower cost.
Mm-hmm. I've no idea if you know it, but how many projects would you consider to having a chance to go in production within the, let's say, next 5 years or maybe 8 years?
If uranium prices stay where they are today, I would say it's one, and that's Arrow. Mm-hmm. If uranium prices go to $50 or $60 a pound, I would say there's probably 4 or 5. You may see Denison's Phoenix deposit advance towards production. Certainly Arrow, of course. We think that something like GoviX's deposits, where they're permitted to mine uranium, need about $60 a pound to be economic, and they can relatively quickly bring that into production. And then a couple of those other mothballed mines. So McArthur River, we think that would take 2 years to get back into production. So that's not going to come back on stream anytime soon and needs $60 or $70 a pound incentive price. And then so that, there's not much out there.
Mm-hmm. Have you ever done a mine life comparison of, let's say, the 10 leading producing projects in the world? Because we are talking about those projects since ever, and we all know you have to explore, you have to find new material that you can mine further. So the question is, if we are talking about an average mine life of, let's say, 10 years, then we are getting in trouble anyhow. If it's 20 or 30 years, okay, then it is what it is. But the point to me is I'm making here is I have the feeling that we have maybe a problem that we are not running out of uranium, but that we are really getting into a supply crunch.
Mm-hmm. Look, it's fast approaching because, the two biggest production centers in the world, Cameco's McArthur and Cigar Lake, in essence, uneconomic now and running out of ore in about 6 or 7 years' time. So that knocks out, what is that? That's bloody, that's a quarter of the world's production. It disappears over the next that time frame. Kazakh production, of course, is ramping down. This in situ leach production really only goes per well for 2 years, so that's sort of coming off as well over a similar time frame. And we have seen studies. We haven't done them ourselves, but certainly we keep a close eye on them. On this front, but there's a really dramatic supply and demand gap opens up in about 2026, 27. Arrow will go part of the way to fill that, but not nearly enough. We probably need 3 or 4 Arrows over the next 10 to 15 years to supply the market.
So if you are saying that 2026 already a big supply gap is opening up, and we know that the nuclear power plants, meaning the utilities, they have lead times, let's say at least 2-3 years, but up to 10 years in the contracting, aren't they getting under pressure that they're gonna secure supply?
Yeah, look, they're an interesting group of people, those utilities and their purchasing managers. They're complacent, to say the least. At the moment, I think they're working down their stockpiles. They're convinced that there's more than enough uranium in the world to supply them. They're not terribly focused on the supply side. They just go into the spot market and find and have successfully for the past 3 or 4 years always found the product that they need there. That just changed very dramatically. Mike Alkin, for example, has been out there talking to those US utilities and trying to explain to them, guys, you better figure out where your uranium is going to come from very, very quickly, because the supply isn't out there. And this is exactly what happened in 2006-07. A very modest swing in the supply-demand balance saw an incredibly dramatic rise in uranium price from $9 a pound to $143 a pound. Of course, it was one of the biggest resource equity booms the world's ever seen. You saw Cameco, most stocks went from, a few pennies to tens of dollars a share in that boom. And it just feels like we're on the edge of something like that again. And it was interesting to hear Cameco say that yesterday, that we could see a really dramatic increase in price. They're normally not that upfront and not that bullish. They're quite cautious. But this time they've turned very bullish. So it feels like we're on the edge of something. Has for a while, has for a year now. But we're getting closer with every day.
Absolutely. Yeah, and every e-car more on the road is, enlarging the problem of power supply. Then there is a question again from an investor in Munich. You have nickel in the project. Will it be a valuable byproduct?
Yeah, good question. Good observation. There's a lot of nickel in the project. There's a little bit of gold and silver as well. It's an interesting, polymetallic deposits, these things. Look, Cameco have produced tried to look at their tailings facility at Cigar Lake, for example, has quite a bit of nickel in it. But they've never ever found an economically viable way of extracting that. So whilst it's an interesting thing, we don't expect that we'd ever actually produce any nickel.
Okay, good, no problem. Then let me see. Hang on, what is there? Then I have on my list here. This is also like a question again to the uranium market. Because you described the situation with the US utilities, that they are maybe supplying into the market, but does that make sense even that they supply in the market? What would be a natural reason for that? And in addition to that question, I heard in the last 3 years very often that the Japanese trading houses and also the Japanese power plants really deploying material into the market because they need to finance their survival. But this might come to an end also. I mean, once you sold it, that's it.
Yeah, that's right. Look, I think there might have been a bit of I might have not given the best explanation. No, the US utilities, we don't think that they're supplying into the market. We think that they're simply running through their stockpiles. They haven't been as active in the market buying product in the spot market as they otherwise would normally be. I think in part just due to the spot price rising modestly, and thinking that that supply will come to them when they need it. So anyway, I think that we will see how things look in the next few months, but I suspect they're about to find out that when they do go back into that spot market, it's very, very tight, and we'll see a price run off that. Japan's still a bit enigmatic. Most of the material that was bought on take or pay contracts into those Japanese utilities over the past few years and since Fukushima were actually bought as fabricated rods and rod material, so not commercially sensible to sell that back, because then it has to be reconfigured back to the vendor of those rods. So we feel that we haven't seen much of that product sold back into the market. There may have been, a little bit when they're taking less downstream material or less manufactured material, but not a dramatic supply. But it does really knock out, as Japan ratchets up its nuclear power industry again. It does mean that we'll see a muted response from Japanese demand for probably the next 5 or 10 years.
Okay. Then we have another Bavarian investor. Where do you see the biggest risks for your company?
Yeah, if you went back 3 years ago, I would have said that our primary risks are internal. Ability to raise capital in a challenged market, exploration risk. I think we've knocked those out now. We've got a truly excellent discovery and deposit on our hands, so that the exploration risk is diminished. And our ability to finance very, very strong. So I would now say to you that and I think we're convinced that Hurricane will be a mine one day in the not too distant future. So really, to us, I think now we see the risks as being externalities. Again, you could suffer a market downturn and financing becomes challenging. We manage that in part by having a big brother company there, and with NexGen that's got well funded and can help us going forward. Plus, we've got great backers like Queen's Road Capital now that want to follow their money and keep supporting us. So we're managing that risk, and then just general market risk for uranium is probably our biggest risk at the moment.
Okay. You just said it with to mine in the future. We saw that, let's say, the uranium mineralization layer is in 325 meters depth, and it looks very horizontal. Yeah. Yes. So I could not imagine that it makes sense to dig 325 meters down to come to the mineralization to have an open pit. So the question would be, how could this be mined? First question. And second question, you have values 40, 50, 60, even 70% uranium. Is this even possible to mine with human beings, or do you need robots? How does that work?
Yeah, sure. So look, I wouldn't expect that we'd ever look at building an open pit. It is a little bit deep, and that sandstone is quite altered and difficult to work in. Plus, you've got a bit of overburden there that's a challenge. What we're looking at, there's a couple of techniques, and the most prominent one is Orano's proprietary Sabre mining technology, which is borehole-based extraction. They drill a borehole. They have a drill bit that expands out, reams out a section, and pumps it back up through the drill bit. And so that Sabre actually stands for surface access borehole resource extraction. And that's a very low capital cost, low operating cost way of mining that material. So we'll look at that. Orano's told us that the deposit looks very much amenable to that approach. And then there are a number of other techniques, directional drilling, Pete's in situ leaching of these deposits, low cost methods to mining. So we're looking at all of those things, and we don't have to make a decision on that just yet, but that's coming. And then what was the other question there, Jochen?
Yeah, just for the depth, because it's horizontal. That was the question. Yeah. Honestly, you answered it fully. That's fine. I'm just thinking, because just one question popped up to my mind. Yeah, exactly. How many meters do you think you have to drill until you can say, okay, now let's do a resource calculation?
Yeah, look, we do internal resource calculations all the time, of course, and know where we stand. Excuse me. We're not going to release anything to the market just yet. We haven't defined the boundaries of the ore body yet, so we've got to get to that point where we know what we've got. So we've got a lot more work to do on that front. And then internally, on some of our resource consultant has told us that on some of the parts of the high-grade ore body that we've drilled so far, we can probably get up to indicated status on some of the zones at the moment, but not fully. So I would say to you that what we probably want to do, we're going through our budgeting process as we speak. We'll probably look at doing another 10 to 12,000 metre program in the winter, infill drilling, and then that will give us a very good indication of where we stand. But I'd expect the back end of next year would be a maiden resource. Hayward do a good job of covering us. I think Colin Healy at Hayward's put a target of 60 to 65 million pounds at 8% U3O8 on a maiden resource for us. I don't know how. I don't know the answer to that though, but worth having a look at his material.
Okay, super. At what resource, let's say resource grade, and what resource amount of pounds in the respective category do you think this project has then a fast track chance to go in production? Or let's say to attract really Orano's greed, I would call it.
Yeah, look, I think, well, what do you need to see to be a project that's attractive for an Orano or to economically develop? And I would say, typically something that would produce 4 to 5 million pounds per annum for a minimum of 10 years at reasonable cost is what you need to see. Do I think we're going to get there? Absolutely.
Okay, super. So let me check shortly here on my large list. We have that. This is done. Yes. Yeah, you answered all my questions. Then also let me check here. Yeah, that looks all good. All questions are answered. Perfect. We are super in time. Yeah, great. Thank you very much. Great presentation and great for answering all those questions. Also, I learned a lot today. This is really fantastic. I am a happy shareholder. Thanks to that. Keep it going, I would say. Very simple. And I look forward then to a much higher share price.
Fantastic. Thanks, Jochen.
Thank you. Yeah, ladies and gentlemen, that was our virtual roadshow with IsoEnergy and Craig Parry, the CEO, and you heard it. It's definitely one of the best or the best uranium explorer here in the world, in Elephant Territory, Athabasca Basin. The drills are turning and they have a lot of news which will come within the next weeks and months. And definitely this thing is growing. I look forward to a real resource, to be honest, because I think this is a monster and this project will go one day in production, definitely. If it's already 2025, 2026, that would be fantastic. Because I still think that uranium will start its bull market. This is also for sure. And we heard it also from the industry, from several funds which restarted to have a look at the sector. And so I think it's great that we had the roadshow today, because to be early in the sector is absolutely not a fault, because this is where you make the money then later. Yeah, so I would say stay healthy. This is the most important thing in those times, and thanks that you have joined us here for a very special, because uranium is not let's say on a lot of investors wish list by today, but definitely we should really make a lot of money with that company. I'm also sure for that. And we will have exactly in 1 week on Thursday 5 o'clock we will have Whistler Resources then with you, where Craig Parry is also one of the guys of the company, I would call it. Even I think you are a co-founder, right? And Whistler Resources we will have then here with Michael Collard, the CEO. We would be happy if you join us then again. Thank you very much for joining us. All the best, and bye-bye from Switzerland, and all the best to Canada.